What was interesting yesterday, and there's the one-year chart actually, Rockwell Collins, what we saw yesterday in the markets was fascinating because you had people running for gold, safe havens, after North Korea fired that missile over Japan. But the markets closed to the upside. Let's bring in Jonathan Hoenig at capitalistpig.com. That was kind of a fascinating market day yesterday, Jonathan.
Yeah. Tremendous resilience, not only in Houston and Texas, but in the market as well, Cheryl, to your point. I mean, we saw panic yesterday. After the news that North Korea had launched that missile, you saw the Dow futures down in excess of 100 points. But as you pointed out yesterday, the market clawed its way all the way back yesterday to actually, in many cases, end higher. I don't think we're out of the woods just yet, though, because the market internals still look quite weak. Yes, Apple hit a new all-time high yesterday, but you saw 121 new highs yesterday, 128 new lows for the market. So I think we're still searching for some direction here, despite a nice comeback yesterday for stocks.
There's other things that the markets are watching. I mean, we had a pretty good earnings season, despite, all the North Korean tensions. That we've had actually a pretty, positive breath. But next week, we're going to get vacations ending. School's back in. That means that traders are going to be back at their desk and a little more active. What does that mean?
Yep, and looking, I think, Cheryl, for some action. So much of the huge run-up we've seen in stocks since the election, I believe, has been predicated on the expectation of, for example, massive tax cuts that were promised all throughout the election. So I think as the fall continues to wear on, a lot of traders are going to be saying, maybe I don't want to own stocks if that's not coming. And you mentioned gold. I think that's one of the reasons why we've seen gold stocks are among the few that are really outperforming right now. We know the dollar is doing very poorly. So I think until we see a little more direction from Washington, you're going to continue to see a lot of those safe haven plays like gold, like the precious metals, stocks that do well when the dollar goes down. Those should continue to shine.
That's interesting. Let's talk about the jobs report that's coming out. That's going to be on Friday. Is that a market mover in your opinion? Or will it be, I guess?
Certainly.
It can be.
Yeah, of course, it certainly will be a market mover. I wish we knew which way it would be a market mover, Cheryl. I mean, one of the things I think that's so probably makes one nervous about this market has been, despite these last couple of days, the real lack of volatility. People don't expect that the market's going to make any massive moves. This has been one of the quietest summers on record for stocks, certainly going back to the early 1960s. So my estimation is that we will beat on the number on Friday, but I still think you could see some kind of sell-off as a lot of investors late in the summer are saying, let's take the money and run.
And real quick, we don't want to forget, of course, what's happening down in Texas and now Louisiana. The economic impact, Moody's saying yesterday, anywhere from 30, I've seen estimates as high as a $50 billion impact from Harvey. What do you say?
Yep. Yeah, well, I mean, certainly you saw the insurers taking on the chin the last couple of days. That's normal to see, and that's ultimately positive to see that the financial markets are functioning quite well in response. I mean, it's a financial cost, Cheryl, but I think the bigger issue for that part of the world, that part of the country, is oil prices, which remain low, I think, even despite this tick up in the last couple of days.
Jonathan Hoenig, capitalistpig.com. Jonathan, thank you.
Thank you. Have a great day.